Yeah, we're live.
Yo,
Yo.
We are live. We are live. Talk Money Tuesday. Right now we are waiting for people to jump on, and while people are jumping on, um, I'll let Levi say a couple of pleasantries. But on this show, we get after it, right? We talk about financial literacy, wealth strategies. We talk about things that are going to potentially change your situation in the next 30 to 60 days. Practical information. This show is not about theory. It's not about just some information. It's literally about getting information in a practical sense and being a take what you can take from it, implement it in the next 30, 60 days to change your situation. And we got an amazing guest on who's actually a really good friend of mine. And Levi's back two episodes in a row, bro. What's up? Welcome back.
man, I'm hot with it. I'm hot.
So, why don't you talk about the sponsors a little bit? And while you're doing that, I'm gonna fly these kites and let people know that we're on right now.
For sure. First things first, let's get a big shout out to our first sponsor, Paper Loaf, the best credit repair company that I know personally. If you have your scores in the 5s and the 6s and you're trying to get to the 7s, Paper Loaf is where you want to go. If you want to get to the 8s, Paper Loaf is who you need to go to. If you look at you try to get that Amex, that gold, that rose gold, that platinum. Paper Loaf, baby. Paper Loaf is the best thing. Literally within the first, I want to say 4 months of working with Paper Loaf, my credit score went up 64 points, and I didn't have that bad of credit. He's good. He's good. He's just fucking good at what he does. And shout out to Paper Loaf. If you want to tap in with Paper Loaf, make sure you follow the IG paper.loaf. That's LOAF. And our second.
And I got a co-sign on that real quick, and then I'm gonna let Levi go. Messing with Paper Loaf, I was able to get the Tesla, 2 Amexes in less than, I would say, 5 months. So whatever your situation is, credit repair, credit restoration, if you just want a credit bump, you want profiles, you need some trade lines, whatever it is, you can get your situation right.
Most definitely.
What else we got on the sponsors, bro?
Second sponsor, the PMSM Group, Private Money Streams Mastermind Group. If you're somebody that's interested in taking control of their 24 hours, whether it be just a little bit or the entire 24 hours, if you're interested in making your money work for you, if you're interested in finding that sense of success through your path and your passion, then you need to be a member of the PMSM Group, the Private Money Streams Mastermind Group, an investment community that really not only gives you the information that you're truly looking for when it comes to investing, but also hold your hand if you need to in regards to cryptocurrency, the stock market insiders, real estate, and that's be residential or commercial. So on and so forth. We have so many things within the PMSM Group, mineral investing, all that great stuff that people are interested in. It's all in the PMSM Group. And then we're coming with a Money Streams app very, very soon. 2022 is looking up. So make sure that you tap in with the PMSM Group. And that is IG at pmsm.group and www.moneystreamsgroup.com.
Awesome, man. So thanks a lot for the sponsors. Something real quick, I just want to throw out there for anyone that's looking to level up your business situation right now. If you want to get more clients, if you want to sell, I'm doing a crazy offer right now. So what you want to do is follow me on Instagram, shoot me a DM. I'm letting you know it's a little ridiculous. I'm only letting a couple of people get access to it. So if you're interested, you can either shoot me a DM on Instagram or just text 213-410-4920. And that's actually the number later on. We're going to give away some bonuses and some free stuff like that. Mike don't know yet, but I'm definitely going to ask him to give away a free consultation or something. You know what I mean?
Sure.
With that being said, welcome to another episode of Talk Money Tuesday. And like I said, you guys, on this show, we get to it. This is not any theory. There's no theory here, right? We're not guessing. This is literally Mike's going to drop some information. This information is going to be vital for your growth in life and your growth in business. And you can literally generate or create, I should say, generational wealth. And then also, you can utilize this strategy to create money for you if you're looking to retire. Or how I like to look at it, 10 years from now, have a big credit line just waiting for you. You know what I'm saying? So you can basically just grow into some wealth, right? So with that being said, I want to welcome our new guest, episode 7, which is crazy. The 7 weeks in a row. Welcome, Mr. Mike Riddell, to Talk Money Tuesday, man.
Talk Money Tuesdays.
Whoop whoop! Hey man, thank you so much for having me, Brendan. It's a pleasure to be here, bro. I'm excited to talk shop and just see what kind of value we can add to other people. So let's get it going, man. I'm excited to talk about strategies and different things that I've used personally, and I know you do as well to help people level up and help them get to where they want to be.
So how Talk Money Tuesday works is we stream live, so we get questions from the guests that may just pop in. But generally, Levi and I will ask you an array of questions about this wealth generation strategy. And then, obviously we're going to look for you to drop some gems, but then also, break down some of this stuff. Like, how real is this? Is this a scam? Is it theory? Are people really using this strategy? So we're really gonna go through it with that. So with that being said, let me just open up with first question I have is, what actually is insurance? Because most people feel like I'm not dying, so what I need insurance for? So why don't we start there?
Yeah, no, absolutely. So when you look at insurance from a couple different standpoints, I think the easiest way to look at it is, everybody can relate to it, is car insurance, right? It's a requirement, right? So when you start looking at it from that standpoint, you just have the ability to insure quite a few different things, right? So realistically, the best way you can apply it and you can think about it, life insurance versus like car insurance. And we're going to talk more about life insurance and the ability to leverage it and use it to grow your wealth and generationals of wealth. But specifically to answer the question, insurance is just a way of really protecting yourself, right? You're driving down the road and you hit a $50,000, $100,000 car. The reason you have insurance on your $20,000, $30,000, vehicle is because you want to protect not only your car to get it fixed, but also you don't want to be on the hook where, hey, I got to pay $100,000 for that car that I hit that was a SUV or whatever that was totaled because in this accident, right? On top of that, most people are familiar with, if there was some sort of injury in that, hey, the insurance also covers injury up to like say $250 or whatever the situation is. I don't sell that. I'm just giving you an example so you understand what that is. That's more geared around like property and casualty insurance. Insurance more specifically geared around what we're doing is really insuring your person, right? I'm a husband. I'm a father, first and foremost. I have kids. I want to make sure that my family is properly protected, right? I'm in the grind. I'm building. I'm with you, blessing my family right now, grinding, building. But listen, I don't want to leave Earth today and know that my family doesn't have money to be blessed and taken care of from that standpoint. So just to be 100% with you, right? Insurance is really my plan to basically leverage and be able to grind and build what I'm doing. But I don't want to leave my wife, a $1 million house, all these, this and that. And then at the end of the day, she can't make ends meet. Right. So it's really covering my family from that standpoint to make sure if I pass away tomorrow, I've taken care of my wife, my family, my kids, maybe a little bit of their education, whatever the situation is. So hopefully that brings it into perspective just in the insurance realm, or what is insurance. Does that make sense?
100%. And with that being said, and I would agree totally with you on that. So I got two questions. The first one is, number one is, why aren't more people just automatically getting insurance? Like, what is the misconception or the disconnect there? And then, do you think, because we're not even talking about the wealth generating aspect, do you think it should be a requirement like car insurance or health insurance?
Love that. Both great questions. And here's what I believe, right? I believe that if we're required to put car insurance on our car, if we're required to put home insurance on our home, right? I think we got to dig deeper into why that's a requirement. So if we take it down to the basics, right? The reason that we have to have that, just keep it real simple. It's protecting the person that's lending the money, right? So for example, if I'm giving you a car insurance, for example, or a home insurance, right? It's protecting the lender on the mortgage or on the car that's lending, right? So that's protecting the lender, and it's a requirement, which is the lender that's requiring it to protect their butt, right? So if you look at it that way and you go, oh man, it's a requirement. Of course, we all have to get auto insurance and home insurance, right? So if you ask me my answer, like just knowing what it does for families, especially seeing all these GoFundMes, seeing people pass away.
I hate those, bro. Those make me sad. You and I used to talk about it all the time. I'd be like, yo,
yep.
Seeing those GoFundMes actually make me sad, bro.
Yep.
You know what I'm saying? Because it's like, it's a one banger. Like, you know, it happens once, a tragedy happens, you then look to crowdfund, but this crowdfunding is gonna happen one time.
Yep.
And that may just be enough to maybe, you know, take care of the arrangements. But then what happens to the family after that? Or what happens to the son or the daughter or the wife or the husband after that? You know?
Yep.
They're still no better off than they were before the case was. And then after that, generally you would think, okay, this happened. There's a GoFundMe. Maybe we should get some life insurance after that. Like, but generally for the most part, I wonder what the statistics are with people then after experiencing the tragedy, then applying to get life insurance.
Right. Yeah, I wish I knew that statistic. I don't know it, but that's a great question, because at the end of the day, what you want to make sure is your family's protected, right? So yeah, I do think it should be a requirement, right? I think that if we're looking at, right, making it important, it is important. It is important to protect our families, right? So, there might be some people out there that might look at, well, hey, you know what? I don't have any kids. I don't have any family. I'm sure it could be, there could be a situation where someone says, hey, I'm not interested in it because it doesn't make sense for me. But more than not, especially as you start getting older, 25, 30 years old, you don't want to pass that liability even on, like, it's 20, 30 grand to go through, an expense of a funeral, right? So you don't want to pass that on to your parents, right? So it's really just a matter of educating. And I think it should be something where, people need to think about it more, and it needs to be talked about a little bit more seriously, because at the end of the day, there's two things that are guaranteed, right? First one is you're going to pay taxes, right? The second one is you're going to die. So if you know that, we got to think this thing through past next year, right? So that's what I believe, at the end of the day is knowing that, I think it's a good way of looking at life. And if you leverage it and you set it up right, depending on how much money you put in, and if you structure it right, it will always pay out in the positive for you, the client.
And what do you think? What do you think the disconnect is? How come most people are not understanding that, from a foundational standpoint, if I have a family, well, not even a family, you have a life. So you should want to protect it. But if you have a family, what's the disconnect why a lot of, people aren't just getting it? Just, what is that processing disconnect that prevents people from having it?
Yeah, I think there's a couple things, but, I think it's education, right? Most people don't even really understand or know that you could get a couple $1 million in coverage for a couple $100 a month, right? Or even in a situation, you're young, I've got a $2 million policy that covers about $2 million, right? And that's $126, right? A month. It's cheap, right? If someone wants, hey, I just need, a couple 100,000, you can look at, it's very cheap, right? So understanding the cost of it's pretty cheap. Now, what I like to go into and explain is, if I'm going to be putting money towards something every single month, I'd like to look at the concept of, hey, if I put in $20,000, right, I want to make sure that if I pass away, or at the end of the day, if I want to use that money, I could pull out more than $20,000, which is why I'm a bigger fan of permanent life insurance vehicles if you structure them properly. If you're just doing for just the insurance benefit, then get cheap life insurance and make sure you're protecting your family and grind and do what you got to do. right? But at the end of the day, like there's a couple ways of understanding why we use it to protect you, your family, your kids, and your life.
So let's talk about that, man, because I think, there's one aspect is the protection.
Right.
Just in case something happens, you can leave something for your loved ones or for your people. Then it's the guarantee of generational wealth. So if you want the cheapest guarantee that you can establish generational wealth for your family, that's through life insurance. So if generational wealth, which is a buzzword right now, but if that is something that's important to you, you can guarantee it for your next generation through life insurance. But now what we really are on this call to talk about is utilizing life insurance to create wealth, to shelter from taxes, and to create a living benefit. And what does that specifically look like? Because like you were talking about permanent life insurance. So what's the difference between permanent and temp? Are people using these strategies for, like I said, to shelter from taxes and to create wealth in the future? Let's talk about that a little bit, because I think these are things that people don't know too much about.
Absolutely. What specifically do you want to talk about in general? I think the concept is there's a few ways to grow your money tax-free, right? So I think if we can lay the foundation to understand why you want to grow your money tax-free, I think that will help out the audience, right? At the end of the day, right now, when I ask this question unanimously, right, our tax is going to stay the same, our tax is going to go down, or our tax is going to go up. Most people know taxes are going to do nothing but go up, right? So if we know that, and if you even go back and you Google it, it's pretty cool because you got that thing in front of you that you can get pretty much anything. If you go back and you look at historical tax rates, after the Great Depression, tax rates went from literally like 20% to 90% at the highest tax bracket. So in the 50s and 60s, the highest tax bracket was 90%, right? So it's gone down. If you look at where we're at right now, we're at an all-time low in how much we pay into taxes, right? Depending on how much money you make, the highest tax bracket pays basically, it's anywhere from about 40 to 50% when you factor in your state and your taxes. You know what I mean? Obviously, your federal and your state, right? So if we all unanimously know that taxes are going to nothing but go up, we want to look at the vehicles that we can grow our money, pay taxes on them now, because we know that we're not going to get around those two things, death and taxes. So pay taxes on the money now and grow it in a life insurance policy. The reason you want to grow it in a life insurance policy, in my opinion, is because you can grow it tax-free in a life insurance policy without risk.
So break that down real quick.
Yep.
How come you could grow it tax-free through a life insurance policy, though?
So I'm going to keep it real simple. There's this thing called NEFRA, DEFRA, and TAMRA. It's a tax law that allows you to grow your money tax-free. One of which most people are familiar with, which is a Roth, right? You can grow your money tax-free. So if you put in 100 grand, it goes to $1 million, right? That's $900,000 that you made in profit, right? In a Roth account. Now, the second one is a permanent life insurance vehicle. So what are you allowed to do? You put money into an indexed account, and it allows you to grow your money tax-free using the tax law, NEFRA, DEFRA, and TAMRA, that allows you to grow your money tax-free. So you can look at that. The cool thing about tax law, most people are like, oh man, I don't know about this tax law. See, if you really understand the tax law, it's to make you and save your money, right? Help you save money, not the other way around. Most people are like, oh, I don't like the tax law. No, tax law is great because it allows you to maneuver, which is what wealthy do. They legally maneuver within the tax code.
Levi, what's your thoughts, bro?
So I definitely agree in regards to the tax law. So one of my favorite books, my ultimate favorite books out right now is Tax-Free Wealth. I love that book. It's also for my Money Streams members that I see up in here. It's in the general section, so you see that book. But here's my thing. So I know how people think for the most part. When people hear taxes, they either get stressed or they get bored, right?
Yep.
They get stressed because they're like, I don't know nothing about it. I'm just trying to get as much money as I can possible from that. And then that's it. When people hear, if they get stressed about it, it's because they might owe money because they don't have the taxes together. But most people, they get bored. They hear the technical words, they hear all that stuff. What piques people's curiosity is when you say, "Oh, you can make money and it's tax free." Of course, for people that do know a little about the Roth IRA, is like you can make that money tax free, but if when you pull it out, you got to pay a little bit, and so that's actually a question that I wanted to ask. So for people that do have some knowledge and maybe they have maybe they're career driven, right? And they have a Roth IRA or they have a 401k. What is going to make that person, right? That person that's making between 70 and 90,000, maybe plus, want to transfer, wants to switch over into this option. Of course, it sounds attractive, right? But when they don't know anything about this is something brand new to them that you're telling them, like, hey, this is what the rich people are doing. They're doing life insurance. It's like life insurance and the Roth together, combined. And I know you never heard about this because the big companies won't tell you about it because they want you to use this right here. But this is the better way. How are you going to get that person to switch over? Because I asked that because if you can tell that person, if you can convince that person that's already has a 401k or already has a Roth IRA to switch over, then you could switch somebody that has no clue. You know what I mean? So, and I'm not saying these people on here have no clue, but for the person that has no clue, sometimes you gotta, I won't say dumb it down, but simplify it in order for somebody to be like, okay, I get it, because they just see that they're okay. I gotta put a couple $100 into an account that I'm not gonna see for a while because this is the right thing to do. Mind you, we're post-pandemic. Nobody's getting the unemployment. Everybody's going back to work. Everybody's either working from home or they're going back here. Everything's fucking skyrocketing. Milk, fucking broccoli and shit. So everybody's like, you want me to give you a couple $100 because it's a good investment when I can just take the same shit and put it into one of these cryptocurrency coins and hold it and then do some shit with it and keep my stuff tax-free. So convince that person. I'm just saying that because I know you guys are pros. And the only reason I know that is because that's how I met B. B was talking to my brother, and I was like, okay. Now I knew what he was going. I was like, okay. I was like, I'm gonna see if he knows his shit. I was like, let me see. So I'm asking him questions, and he's pinging it off. I'm like, okay, he's a pro. And so I was like, all right, I'm gonna dabble in it and see what's going on. Unfortunately, we have some email issues. We'll get back to that later. But yeah, so through the whole thing, please simplify it. And let's go from there. We do have a question, though. It says, first step for someone who has no idea. Right. So that's what you're saying. Like, I have no idea what's going on. How simplify it for me so I understand. And for the person that does have an idea, why would I switch over to a 401k or a Roth IRA and go into this?
Can I jump on? Can I ask something real quick before you jump in, Mike?
Yep.
So real quick, two quick things, and I'm gonna let Mike flow. So Ari, simply, if you want to protect your life and guarantee that there will be finances available for your child, that's one reason why you want to invest in life insurance. If you want to guarantee generational wealth for your offspring or for the family members that you may leave behind, that's another reason why you want to invest in life insurance. And then specific life insurance strategies you can use to create future wealth, like Mike's going to talk about, tax-free compound wealth. And these are strategies that wealthy people have been using for as long as the tax codes have been in place to create generational wealth for their family. So I just want to add that. And then the second thing I would say is, to Levi's point, you don't have to tell them to get out of a strategy, but this is something that they can add because you want to diversify your situation. So they can keep their 401 if they want. They can keep the Roth if they want, but you also want to do this because now this is going to give you a little bit more upside.
Yeah, and just to add, you're 100% on, Brandon. Just to add to that, I actually advise people, right? If their work is giving them some sort of match, some sort of like, hey, I'm going to give you 3%, 2%. Every time I ask somebody that, I'm just going to be real with you guys. They're like, yeah, they give me some money. I go, well, how much money are they giving you? They have no clue. So first off, get more specific. Ask the right questions. How much are they giving me, right? And if you're getting free money, right, you want to ask the question, when do I get that money, right? So essentially, if you're working at this career or this place that potentially gives you a match on your 401k, I always suggest, hey, it's free money, right? I'm all for free money. But there's also clauses. Hey, at what point am I entitled to that money is the question, because your employer could potentially have a 10-year vesting period on that money that they're quote unquote matching. You leave that job at 9 years, you don't get any of that money, right? It's supposed to be a match, but these are just basic questions that you can consult. Obviously reach out. We'd love to help you answer those questions. But for a first-time investor or somebody that knows nothing, what I would say, just to keep it real simple, Levi, because I'm just like you. I need the facts. Tell me the facts, and it's easier, right? That's how my mind works. So just to keep it real simple, the way I take somebody and I help somebody, first off, step one is I don't care where you're putting your money. Step one is you got to start saving money, right? And I'll just tell you, the wealthiest people I know, they're not saving 10, 20, or 30%. They're saving 80% of their money, and they're living off the 20% of their money. So write that down if you guys want some fire. Like, that should be goals, right? The second piece of this is, if you are starting to save money, you want to look at and compare, right? And this is what I help my clients look at. If you want to compare the traditional 401k in the S&P 500, the top 500 companies in the United States, right, compared to a Roth in the S&P 500, top 500 companies in the United States, compared to a max-funded index universal life. I have a very simple visual chart, and just to give you the numbers, if you took $100,000 and you put it in each of those over the last 23 years, just to give you an example, $100,000 in the S&P 500, whether it's a Roth or it's your 401k, turns into about $300,000. Now, remember, in the regular 401k, that's going to be taxed at whatever rate we're at in 20 years from now, right? So you're going to lose 30, 40, 50%, depending on what your tax base is. So out of $100,000 in the traditional 401k, factually, over the last 23 years, that 100,000 goes to 3. And if you're at a 40% tax bracket, you'll probably see about 150 of it, right? Same situation in a Roth, that 100,000 turned into 300,000, you get to keep it because it's already been taxed up front. I like a Roth better. Now, on an index universal life, if it's properly structured, not only do you have a couple $100,000 death benefit, no matter what, if you pass away tomorrow, your family's blessed with that. You also have taken that same $100,000 because it's indexed, meaning you can't lose money when the market loses 50% like it did in 2007. And now you have about $700,000, $600,000 to $700,000 in that exact same account, and it's tax-free, and you have a death benefit. So I'll keep it real simple. You can see it visually. I have a chart that you can break that down. But that's how I help people understand it, because for me, if I didn't see that simplicity, right, I would have never done it either. I hope that answers your question and it gets to the point for you.
No, it definitely did. It definitely did. I love the answer for sure.
So my thing is this: we're talking about using an insurance contract to generate future income. Most people cannot think about long-term situation. They're thinking about now, immediate. So why would something like this be a great strategy for someone to implement that could guarantee that they have something to look forward to? You know what I mean? So, like, whether you're a younger person right now, let's say you're about 25, why would this strategy be good for you to really consider? And if you're someone that might be in their 40s, is this something that they should still take advantage of? And if they're in, let's say, an insurance that's not serving them, like, because, like, maybe they're in a Primerica situation, maybe they're in a a temporary insurance, maybe they only got 10-year term. Why would someone want to move over to something like this? Like what else is the value with it? Because we kind of talked about the taxes, yeah, but like what's the other value? Because I want people to really understand the concept. Because we're glossing over it a little bit and we understand it, but for some people that really don't understand it, why is this something that they should be really taking seriously?
Yeah. So keeping it, simple, the infinite banking concept is basically you take your money, right? You put it into a vehicle like this and you can access it, right? If you want to access it 10, 15, 20 years from now, you can click a button. Within 24 hours, you have the money in your account. So keeping it real simple, I think as people start to look at this, right, you can't do that with your 401k. You can take a loan from your 401k, right? So when you start looking at that, you can take a loan from it. But guess what? Did you know when you pay back that loan from your 401k, you pay taxes on that money going back, and then you pull it out again, right? You take another loan, you pay taxes again. So sometimes people are paying 2, 3, 4 times on the money that they borrow out of their 401k. So it's from that standpoint, if you structure it right, meaning that you can put $500 in this vehicle every single month, right? You should put $500 in this vehicle every single month. And then let's say 10 years from now, you got $20,000 you have access to. Right now, you can take out, instead of pulling out of a 401k, you can take your money out essentially, or it's quote unquote a loan. You can take the loan out of your insurance policy, use it to invest a rental property, or use it to put your money to work for you in real estate and mortgage. Now you've become your own bank, right? Instead of leaving your money in the bank account that's paying you 0.01% and you're losing 4%, and this year is 12% because of inflation, right? And the cost of milk keeps going up. You can put it somewhere that it's going to make on average 6 to 8% consistently, and that's a conservative number. Consistently, and it's a conservative number, but you're making 6 to 8%. And even in the situation, you're still building way better than you would at the bank at 0.01%.
So you kind of alluded to one thing that I was going to ask you. So I'm going to just kind of ask you. But before I do that, we did have a question, right? Yep. And one of the questions was, if I have mortgage insurance that doubles as a life insurance, is that a good investment?
I've never heard of mortgage insurance doubling as life insurance, so I would double check that.
So, Mark, you may want to give a little bit more context, but we can probably get back to you offline on that, because it sounds like you may not have the same type of coverage since it's a combo, but we would have to probably look into that. So if you can give a little bit more context, that'd be good. And then Ari asked, what's the first step to setting up life insurance or setting up this type of strategy?
Yeah, I would say just, a consultation. Hey, I'm interested. I want to check it out. Right. And the one thing that I would say is, what we can do is we can look. The good thing about what we do and how I do it is I want to check it between 2, 3, 4 different places for you to make sure you're getting the best deal out there. Right. That's important. Right. Making sure you're getting a good deal. And outside of that, you're looking at a couple different places. So yeah, set up a consultation. Hey, Mike, I want $1 million policy. How much is it going to cost? I'll look at this place, this place, this place, and this place, and give you the options, right? Understanding that. Or, hey, Mike, I want to have, let's work this backward. I want to build a retirement plan. Here's how I did this, right? To just give you an idea. Me and my wife both have policies. And the bigger policy is amongst my wife because it's, she's younger. She's a lady, meaning that she gets cost of insurance a little bit cheaper. So what have I done? I take a bulk of income and I put it into this tax-free growth strategy. Just to give you rough numbers, right? My wife's 32 when we set this up. By 55 years old, we'll have taken basically 300 and right, let's say about $300,000 that we put into this. So we take about $50,000 a year for a while and max fund this. And then we let it just sit in there until she's 55. At 55 years old until 90, my wife, whether I'm here or not, she has a retirement plan that pays her about $76,000 like clockwork every single year until age 90. So we took $300,000. We pulled out our initial $300,000 investment and we made an additional $2.3 million in my life insurance policy in our retirement plan from that standpoint. So these are just conversations. as long as you're working with somebody that knows what they're talking about, you just want to reach out and connect with them and make sure that the vehicles are funded properly if you're using it for a retirement vehicle or if you're using it as an infinite bank, because sometimes people will just get it and it won't be structured properly. That's where these vehicles will get a bad rap, if that makes sense.
So the living benefits, right? Let's go into the leverage part of it, right? Because we talked about a little bit. You can use it for investing in real estate and stuff like that. But let's talk about how you can leverage this asset. And Levi, if you have something, because I know you're on your end working on a couple things, but if you have something, definitely tap in. So Mike, yeah, talk about the leveraging opportunity.
Yeah, more specifically to borrowing the money, or give me
let's say you got this sitting there, 10 years, fully vested. Now it's available to you. How would this investment now yield the opportunity to leverage? And what are some things people can do with the money?
Right. So my own strategy, the way that I like to look at this is, like you said, 10, 15 years from now, if there's an apartment complex or, 2, 3, 4 unit home that I want to borrow the money and put as a down payment for something or use it. Essentially, I'm going to take it out and use it, right, for my real estate investment purposes. And let's say, for example, I'm going to make 10, 15% on that real estate deal, right? Cash on cash. The conversation is very simple. I'm going to take it out over here. Let's say it was 500,000 I have over here, or 400,000 or 200,000, whatever it is. I'm taking out 50,000 of this. And here's what I love about leveraging this. And this is getting more complex, but you take out 50 grand and essentially go and put it over here in real estate that I'm making 10, let's say, for example, 10% on. I'm going to be charged for that 50 grand that I used about a 4%. I'm going to get charged about, let's say, anywhere from 3 to 4% for borrowing that money. But as long as I'm making 10% on my investment, I'll still continue to make 6 to 8% over here, not on $50,000 less. It's actually, let's say it was 200,000. I pulled out 50,000. So you would think that you'd only be making money on 150, but I'm actually making 8% still on $200,000 in that index account in my life insurance vehicle, right? So keeping it real simple, I'm getting charged 4% on the 50 grand that I borrowed, but I'm still making 6 to 8% on $200,000. So leveraging it and utilizing it right, if you utilize it right, you can do that, and you can put it toward your future investments, put it toward your retirement properties to generate more cash flow and income. A 4-unit property maybe will bring in, $3,000-$4,000 in cash flow, $2,000 in cash flow, right? Just depending on what you decide you want to go with at the time when you borrow the money. But it's one of the best vehicles to leverage it as long as you structure it right.
So 2 things. What happens if you do put the money back after you borrow it? And then what happens if you decide to not put the money back if you borrow it?
Yep. So very simple. If you do put the money back, essentially that 4% that you're paying on the 50,000, you don't pay it anymore, right? You just put it back. It's good, right? So you essentially aren't being charged 4% on that 50,000 just for this scenario. And if you don't decide to put it back, you just keep getting charged that 4%. But as long as you're making the 10% over here on your real estate investment, it really doesn't matter because you're netting 6% on that scenario.
So you're really making money.
Yep. And like I said, if you want to, you could pay it back, and you say, hey, you know what? Here's my 50,000. I want to put it back in here, and then your family would get it when you pass away, or you just keep paying the 4% because you're making more money over here.
So I got another hot question, but I want to hear what Levi got to say.
Go ahead, Levi.
So one of the questions I got on one of my Instagram's lives was, through all this, is there a way that you can implement a trust for your children, a trust for maybe your future child, and if so, what is that route and what does that look like?
Yes, great question, and I would highly recommend you do that. The trust would be a living trust. It's a couple $100, usually like $500-$600 to set up a living trust. And I highly suggest doing that. And what I would put as the beneficiary for this, let's say you have 2 or 3 kids that are, 10, 8, and 12 years old or whatever, right? The trust has basically clear guidelines that tell us, hey, when my child turns 18, and you can write the rules for the trust by setting this up this way. Hey, when my child turns 18, I want to give them, $5,000 a month for this much time. Or, hey, when my child turns 18, I want to give them a lump sum of $100,000. But then at 30 years old, I want them to get a lump sum of $500,000, right? whatever it is, right? To get them through and help them from that. So yes, you can implement the trust. I highly recommend it. Most people have no knowledge on a trust, but it's a very, very smart vehicle to utilize to protect your assets. And it just really gives clear guidance. So that way, when you do pass away, you know that my kids are getting X, Y, and Z at whatever rules you put in place for that.
True. Now, I know there are different types of trust. Do you have a specific type of trust that most people go for, or that you would encourage most people to pay attention to?
I'm not a trust attorney or anything like that, so I wouldn't be able to give the exact, hey, you should do this one or this one, but I would definitely consult. There's some attorneys that deal with trust. Hey, what's the best trust to get set up? And then I know that there's a lot of money in that. So if you find, hey, listen, I want to get this trust, and someone's trying to charge you $2 or $3 grand to set up a trust, it should be somewhere between like $500 and $1,000. That's a reasonable number to get a trust set up. So if you find somebody going, hey, it's $2, $3, $4 grand, there's too much margin in that thing.
Right. Most definitely.
Yep.
Yeah. So those are the two main questions. Go ahead.
All right. What's this infinite banking concept? Because I want people to really understand this. So, all right, we're talking about insurance is layered, right? It's layered, especially if you get the right product. Yep. Layered, right? So we're talking about you're covered if anything happens to you. You're automatically creating generational wealth, and then you can create a retirement situation and tax-free income, tax-free growth income. But then, like the concept of this infinite banking, break that down, because I want people to really get it. It's like you're paying for the Toyota, but you're getting a Lambo.
Right.
You know what I'm saying? So I want people to really understand this, because like this can change your life. You know what I'm saying? It can really change your life. So let's talk about the infinite banking concept, and if you could compare it to normal everyday banking, that would be helpful too, so people can understand.
Yeah. So I mean, let's just be real. If you want to look at, I'll compare it to the three. Right. Most people are familiar with the Roth or the 401k, and if you look at the Roth or the 401k, that money is locked up. Right. I wish I could play that Akon song. Right. Locked up. They won't let it out. Boom. It's gone. Right. It's locked up until you're 59 and a half, or you leave that job or whatever. Right. So the money is gone basically. Now, here's the conversation around that. If you put it in the bank, right, you're losing money. We already know inflation is killing you, and you're only making 0.0 nothing. So that's the second option. And then the third is you put it into an index account. And the conversation is infinite banking is putting it into an index account, and you're growing it, right? But here's the conversation. It's not locked up until you're 59 and a half, right? So essentially, you've taken the money and you're putting it somewhere no matter what. If you put it into the index concept, so you grow it, you don't have risk of losing the money. You've taken 50 grand a year and put it in here, or 20 grand a year and put it in here. That money potentially grows tax-free. So it's the exact same concept of putting it here, here, or here. But now what you have to start looking at is, what am I subject to if I put it in the 401k? If I put it in the 401k, I'm subject to taxes later, right? And then essentially, if I put it in a Roth account, I'm subject to the downfall of the market. If the market crashes and everybody loses 40, 50%, I lost 40% in a Roth account.
That's definitely about to happen.
Exactly. What's about to happen? Now you got to start looking, right? In the index account, there's a protective floor and there's a ceiling. So you might not make 30, 40%, but listen, there's 12, 15, 20% that you could make in an index account, depending on what provider you work with. And you push it over here. And essentially, even on the years that it crashes, you have a protective floor that guarantees you're not going to lose money in that account, right? Definitely. So that's what I would say if you're looking at that infinite banking concept. So it's really just like you're banking right now. Where's your money going and how much are you making? You're getting a much greater rate of return. And I say conservatively, 6 to 8% tax-free growth is a conservative number on infinite banking concept, as long as you're looking at like an indexed universal life, right? It's going to be much less on like a whole life policy. And I'm not a fan of whole life policies. It's a lot less personally. right? There's a lot more money going toward cost of insurance. A lot of people will tell you, oh, you get like more safe returns. You know, it's more, they say it's like bond-like returns, right? Why would you go for a bond-like return when I can make 6 or 8% over here if I structured it right? Facts. So that's what I like to push on and help people understand. And then if you wanted to use the money when you want to use it, right, it's accessible, right? Now, what are the downfalls to the infinite banking side? Because I showed you the downfalls here and there. Downfall to the infinite banking, got like a 10-year, a 10-year surrender policy. Basically, you got to keep it in there for 10 years, right? If you cancel it in the first year, right, there's a hefty cancellation fee. All the money you put into that thing is gone, right? So you got to just understand that. So I'm putting money in knowing that I'm going to be in this for 10, 15, 20, 30 years. At the 10th year, there's no surrender charge after the 10th year. So 11th year, if you decided to cancel it, here's what would happen, right? Let's just say 10 years from now, you're like, hey, this is great. I put the money in there, but it's just not my thing. If you canceled it, let's just say, for example, which is I don't suggest canceling it, but if you wanted to, you have put $50,000 into this and you have, let's say $50,000 or $60,000 or $80,000 in there. Let's just say 80,000 for rough numbers. You have $80,000 in here. You had a life insurance policy for, 500,000 or $1 million, that whole 10-year period. If you were to pass away, now you say, nah, you know what? I'm not interested. Just cancel it out. Send me my check. They send you a check for $80,000 because you have a cash value of $80,000 at year 11. Now that year, when you go to file your taxes, you're no longer protected by NEFRA, DEFRA, and TAMRA because you canceled the insurance policy. So now, well, guess what's going to happen? They're going to say, hey, you made $30,000 on that investment. Pay us, Uncle Sam say, pay me for that $30,000.
Pay me my shit.
Yep.
Because I'll take it all. If you don't give me mine. Yep. I have a question, but before that, I want to make a statement. Yes. For people that are watching this, I'm gonna give it to you this way because I know some of y'all, right? And I don't mean personally. I mean, I know how people think. Most of y'all are not going to make the code switch because that's what it is. It's a big ass code switch. You have to think that you're legit taking, a few $1,000s a year and putting it into something when the majority of us are Amazon Prime style, right? We want our shit now. We got it coming in. We're gonna put it somewhere. We're either gonna invest it into something that's gonna make us it back more, or we're gonna buy what we want now. We're not into the long term, and that's what is real popular right now is the short term of investment. But this right here is something that you all need. So this is how I would advise you to take the code switch. It's a light way to do it, but when you start it, it'll make it easier. Write down all your expenses. Write down the amount of money you make per month. All that money that you make per month, put it to the right. All your expenses, put it to the left. And I mean everything. How much you go out, the gas you spend every month. I'm talking about everything. You go get those massages. Ladies, you go get your nails done, whatever it is. Guys, you're going to get your naps, your beard, your scruff trimmed up, whatever it is. Write it all down. Go through your credit cards. Go through your debit cards. Write all your expenses down. Look at how much stuff that you can live without. Because it's not about what you want. It's about what you need. You need this. You need to increase your level of wealth. You need to increase your level of having more and doing less. In order to do that, you have to spend less. And if you can spend less of the money that you're making right now, then you're going to have no problem doing that as your income grows, because we've been making money since we were 9 years old, right? And right now, whether you're a business owner, you're an entrepreneur, or you're a career-driven individual, you're making you're making an income. Whatever that income is, as long as you keep doing your thing, you're then going to get promotion, or your business is going to grow, or as an entrepreneur, you're going to have so many sources of income. So that money is going to continue to keep growing, and that small amount of whatever you that was a big amount of time that you spaced out and said, you know what, I can do without this $10,000 for this year. I can do without this 15,000, even though it sounds like a lot. Sounds like a lot. But when you take away some of the miscellaneous stuff that you don't have to do, that you just want to do, is not a need, you start to make a habit of that, because it takes 21 days to make a habit, but it takes 365 days to make a commitment. All right. And when it comes to commas, you have to commit. All right. When it comes to commas, you have to commit. So in order to do that, that's the code switch that I would advise you make. You start light, because what's the bare minimum that a person can put into this situation a year? Is there like a $10,000 minimum for the year? Like, what's the bare minimum?
Good question. So I've structured them as low as, if you got, $200 a month, $200 a month. It's going to differ based off of your age too, because as you get older, you can put more money into the same amount of life insurance coverage. Mm-hmm. If you're younger, you can't put as much in. So it just depends on where you're at. But, I've seen them, like you're putting in the 401k, if you're putting anywhere from $2,000, $4,000, $6,000, $8,000 right into that, we can structure them that way as well.
Okay. So you see that. So if you said you've seen them as low as $200 a month, right? So if you look at how many times you go out, whether it's to party, go out to the bars, if you're buying drinks or whatever it is, depending on if you're getting your hair done or whatever it is, you can find those different things to be like, you know what? I can take away these 4 different things and have that $200 go towards this specific thing that's going to be a long-term investment for my life. And as I become more successful, that $200 is going to look like $20. And eventually that $200 will look like $2. And then you're going to want to give more to where it feels like you're back at that 200 or even 2,000 mark. So that's how I would say to do that. Start to cut off the little things in order to give out more. But here's my question. This is a personal question for me. This is not from anybody else. Will there be a day where cryptocurrency comes into play?
Man, I wish I knew the answer to that one. Crypto seems to be like, a lot of people are into crypto, right? And there seems to be some great returns on it. So
fantastic returns.
Exactly. Right. So I would say, listen, the idea is, you got to look at your life, and you got to understand there's high risk, there's low risk, and there's no risk, right? So I think you got to have all of those buckets set up. Brendan, you could probably answer that the best that you know how, right? I think there will be. I think it's a valid, question. I think it's a great bucket to have, right? I'm a big believer in, really helping yourself consistently say, I'm certain that I'm going to have this money when I turn 65. And my goal in life is to help people, right? A statistic right now is 95% of 65-year-olds go to retire and they realize that they're broke and they got to work their way to their grave, right? Mm-hmm. So I think that you just got to really understand that, hey, there's places and there's buckets for all of these things. And it seems to be that crypto is getting more and more, lucrative, and it's getting more and more aggressive. So yeah, I mean, at the end of the day, yeah, I think there is a place for crypto. It's just a matter of what your appetite level is, and I'm not your guy for that. It sounds like you might be the guy, Levi,
I mean, when it comes to crypto, I have my experts and my companies that are contracted out to my company itself. But what I'm saying is in regards to, and of course it hasn't happened yet. I'm hoping that one day in regards to doing this, that it's not just in regards to the money that you're making. So let's say, for instance, you can do this, the life insurance and have all this, but you can maybe go through a certain cryptocurrency. Maybe these companies start to contract out to XLM, XRP, ADA, one of these up and coming cryptocurrencies, into where now you have somebody that maybe they're currently not making enough. When they're making enough, but they're not making as much as they want to, but they can use that cryptocurrency money that they put into those cryptocurrencies that has grown within maybe a few months to pay their monthly balance of whatever it is. Or maybe they have they don't have anything in their banks, because a lot of us, like myself, I'm taking my money out of the bank and I'm putting it into cryptocurrency, because my guy, not even my guy, but that man Biden is making it really hard, to have anything in banks right now. Trump might have been an asshole, but at least he was getting me some bread. he was taking care of the shit. All right. So right now it's about taking your money out and putting into something that I'm not going to get taxed for. I'm not going to and invest and have my money go from $1,000 to 10,000 within the same month, and be like, okay, well, damn, now I can either hold on to that and move it somewhere else and have it grow some more, and potentially have that 10,000 turn into 50,000, and then buy me a Tesla for a low model Tesla for like 30, 40 grand, and then get a $10,000 write-off. So that's how people are thinking right now. So what I'm saying is, let's say these companies, they contract out to a cryptocurrency company, and now that low amount that they paid just to get into that currency has grown, excuse me. And so from there, they're able to pay monthly to that company for that policy, to have everything that they would like to have in regards to even having a trust, and the life insurance, and so on and so forth. So that's what I'm hoping one day that actually comes. I feel like that's going to be something that's going to have to be done, because a lot of people are starting to deal with less of cash and more of cryptocurrency, because now crypto.com, Uphold, and KuCoin, they're creating their own debit cards, to where you're like, hey, we'll pay for your bills, we'll pay for this, just keep putting your money into our currency, and we're fine. So now you have less of that and more of that. And so that's where I feel like there's going to be a dilemma in regards to people being like, okay, well, let me put this money here, which is a very important long-term investment. It's very important. But like I said, Amazon mindset for the most people.
So let me tap on a couple of things, right? So I want to bring back on a couple of concepts. So the first thing is, people probably listening and wondering what is Infinity Bank, right? What is Infinity Banking? So I'm just going to break it down right here. So Infinity Banking refers to the process which an individual, him or her, become their own banker. It was a concept that was developed, by Nelson Nash, and basically it says someone is going to own policies, individuals, to dictate their own personal cash flow and borrowing against and for themselves, instead of investing directly in the banks. So that's one thing. So you kind of get like an idea of what Infinity Banking is. Secondly, a lot of the concepts that we're talking about, you want to really diversify your situation, right? So it's like, okay, crypto, I want to do that type of investment. Insurance, you just need some for your life regardless, even if you're not going to necessarily get, this policy versus that policy. You need life insurance, but we'll talk about obviously this particular strategy. So life insurance, you may have a Roth, you may have a 401, you may have some real estate, you may be investing in stocks, you may be investing in a business, you may be investing in Toro or something, or you may be, this Airbnb. So there's all these different things. You can 100% be diversified into all the things that you would like to be diversified. There's no right and no wrong. You got to think about what works for you. But do you want to just always have your money in the conventional banking system? You're paying them. They're basically charging you to hold your money.
Yep.
And they're using your money to make crazy returns on it.
20-30% minimum.
And they're giving you nothing for it. And you're losing money depending on which bank you're in. Not only are you losing money, they're charging you for it. So it's like 2 L's. So if you learn the infinity banking concept and you have the index universal life strategy, well, you're set up to win right there. And really, this is what I was telling Levi maybe like a month ago. Me and Mike haven't talked about it in greater detail. But if you create an index universal life for you and your wife or your partner or whatever case may be, that's at least a 10-year strategy that you're going to grow into, but it has the coverage, right? Because you have the me and Mike used to call it the just in case benefit, right? If anything has happened, that's a long-term strategy. Well, I was always looking at, okay, well, what fills the gap? How do you fill the gap, right? How do you fill the gap? So within that 10-year period, you can look at it like this. You can build your infinite bank, the Federal Reserve of you. So you look at, like Levi said, you do a budget. You sit down personally, you sit down with, your loved ones. Hey, what can we scale back on? What do we have, net at the end of the month that we can play around with or invest? Well, let's say you have about $3,000 or $4,000. Well, what you may want to do is start creating your infinite bank. So what you want to do is start creating your personal reserve. So you want to do a 3-month emergency fund. So if you got 4 bands, that's $12,000. Okay, take another 3 months of a reserve, $24,000 now. Now you got a pretty healthy reserve. That's just in case, emergency, and now you just built up your Federal Reserve that now you can use for investing. So you got 24,000. Maybe Mike wants to start a business. Maybe Mike wants to invest in crypto. Maybe Mike wants to invest in Toro or Airbnb. Well, now you created the money to do so. So I might take 10 grand out of that 24 grand, invest in a business. That's going to bring me back a return. I got one asset. Now I'm going to take that 10 grand after I make back in my business. I'm going to redevelop my reserve. Fill my reserve back up. Okay, I got 24 again. Oh, me and Levi are going to go on a business now. How much I need? Oh, I need 20,000. Okay, I got 24. Okay, boom. Levi's going to put in 20. I put in 20. Boom, there's my 20. My reserve's down to 4. How long is it going to take me to get that 20,000 back? I just created another asset. Now I got 2 cash generating assets, and I got a reserve that I'm keeping plentiful, and I'm always, making full again. I'm always replenishing that. You do that within that 10-year period. How many more cash flow streams are you creating? And you still have your income if you got a 9-to-5. You still got your entrepreneurship situation if you're doing that, or both. Some people have the hustle and the corporate situation. And you still have your money that you're going to grow into in the next 10 years that you can leverage, like Mike said up. So if you got your infinite banking strategy with at least 6 months of, what you can afford in reserve, and you have your life insurance policy set up, you set up for wealth creation. You're the pillar of your family now. You just changed the whole narrative. I mean, that's what I'm working on. I have the IUL situation. I'm working on the infinite banking situation. You set up. You basically cracked the wealth code. You just changed your whole trajectory of where your family's going or where the next generation of your family going. And then you set up that trust that Mike was talking about. Your name's never going to be forgotten. Yeah. So that's what I'm saying. Like, that's what the infinite banking can do. And I just learned that concept, I would say last year, really, like, to fully understand it. In the IUL situation, Mike pulled me aside. He gave me that like 3 years ago. Mm-hmm. At this point. So on this live right now, you just learned all this information that can seriously change the trajectory of your business. But the bottom line is you have to really look at your budget to be more conservative, like Mike was saying. Invest at 80, live on at 20, whatever that 80-20 looks like for you, and then start to put these things in place.
It's funny. It's funny you said that earlier, and I legit, my wife and I, we legit agreed to downsize for like the next 6-7 months. We're like, all right, we're gonna go ahead and we're gonna live on 20. Like, we're gonna live on 20. We're gonna invest this 80 because we're both about to make a big shift money-wise. So a whole lot of money is coming into play. Thank
lot of money in this.
Thank the powers that be. You know what I'm saying? So with this shift and everything that's happening right now, we're preparing because everybody wants the big house or a nice house, nice cars, and to live that fruitful life. But you got to plant the seed, and in order to do that, you have to take that risk. Of investing that 80 in however way you're going to invest it in and living off that 20. So it's definitely not easy because your boy is like, oh my God, I don't want to do this. And you might not be able to eat that sirloin, you know what I'm saying, them lobster tails, that risotto. You might not be able to eat that for a while. You might be on pork and beans and weenies for a few months and
Pork and beans and weenies.
some ramen noodles, and some turkey sandwiches. Yeah, that might be the thing. And some baked chicken. You might be tired of baked chicken after a couple months, but guess what? Your bank account, your asset portfolio is gonna thank you. It's gonna thank you. So make that code switch. Make that code switch.
So real quick, we're over an hour, and I know Mike got something. You got a call coming up, right?
Yeah, I gotta be off by 5:15 for sure.
Call coming up. So what I want to do now is there's one more question we got from the live chat. So I want to give that out there.
Yep.
And then would you be open to giving away a couple of consultations for people that may want to talk to you further about understanding this strategy?
Absolutely.
All right, so we'll give away two. So we got a couple people on. We'll give away two. So Ari has a question. She had a question about purchasing, right? So if you buy life insurance for protection and wealth, and something happens unexpectedly, how do you deal with that legally? She's asking because her mom is very ill, and she wants to pass this information on to her to help her build some wealth.
It might be too late.
Yeah, depending on how ill and what the situation is, I think Levi's right. It could be a situation where you couldn't get obviously qualified for life insurance. That's why we try to push people to start early, right? Do it when you're healthy, when you're young, because you don't think anything's going to happen. A lot of times, even people that are 20, 25, right? And then you hear about them, they got cancer at 28 years old or whatever, right? So do it while you're healthy. But yeah, I mean, we can talk on a one-on-one basis about that with your mom, depending on how ill she is. And it gets more expensive when she gets older, right? It's a lot cheaper when you're younger. So you definitely want to, it can make sense when you're older. You just got to, really look at the situation when you're somewhat healthy.
Cool. So what I'm doing right now is if you want access to one of the free consultations, we're going to give away two. Text 213-410-4920. I'm going to look at the chat right now. Levi, do you have any other questions in the meantime? And Mike, is there anything additional you would like to share?
Yeah, if Levi, I wanted to answer your question specific to kind of getting into the ability to push it into like from a crypto into right. I think that we'll get there eventually. I think the problem, and just looking at it from a bigger perspective, is the government doesn't have control over it, which is the biggest thing right now, right? So
exactly.
It sucks, but the reality is this, and they want you to pay taxes on your money. So that's kind of what the expense you're at. The other thing I would talk about, some people, maybe they're not there. Like we talked about earlier, maybe they're not at 10% savings, 20% savings. They look at like 80%. They're like, you guys are crazy. I can't even live off of everything I got.
For real.
Right? I'm thinking about it that way. What I would say is, like you said, I love how you really broke it down, bro. Like you're speaking my love language, because people really have to get real with where they're at, not where they think they're at, right? And that's a good exercise. I got $10,000 coming in and I'm spending $9,000. I can open up $2,000. Here we go. I'm at $7,000. Now I got $3,000 in basically in income that I can start to save and do that. The other thing is, like, maybe you're at a point where you're like, man, I have cut every expense and I still can't get there. Reach out to, I'm sure a couple of us, from my standpoint, that's what I do. I train entrepreneurs. I want to help people have a system plugged in that they can make some money, right? It's not going to be easy, but you're already working. You might as well connect with the right people that are making money, get trained, understand how to make additional money. Because if you're at a job that you're getting paid minimum wage and it just ain't cutting it, I get it. You can't even buy milk because of inflation and everything. Reach out and go after your goals and your dreams. Get around people like Levi and Brendan to really get into the next step of your life of, hey, you know what? I am going to put another 10, 15 hours a week. It's going to be hard, but I'm going to do it. And I trust that you guys are going to put me in the right leadership position to be able to get them and making them some money from that standpoint, which is powerful for me. I like to really pitch that, because at the end of the day, like that's been a huge blessing for me, is finding the right mentors that poured into me and gave me those opportunities. And I know you guys are all about that too. So
Yeah, I want to press upon people that 2022, you need to make it a priority to make money. You know, like I want it to be something that is top of mind, because a lot of people will be like, oh, I don't want to talk about money, or I don't want to share how much money I make, or why are you asking me about income? And that's not the mindset that you want to have. Talking about finances and talking about money should be a healthy conversation. You know, so if you're around a group and it's not openly appreciated and supported to talk about, okay, money strategies, generating money, you know, how we're making money, different ways to do investments, that's definitely a group that you should no longer participate in when it comes to those type of conversations. You may not want to cut those people off, but you may want to start having conversations about those subjects with other people, because
Cut the motherfuckers off.
you want to be in a group with that's supporting. You want to be a group that's supporting. And if someone's asking you and like, so I was on a call, what was it, yesterday or the day before? And I was at my friend's event Sunday, and one of the girls was like, it was a women's empowerment event, and she was like, one of the questions was like, you know, how much money do you make or whatever. And then the girl was like, well, I don't really like talking about money because I don't want to, you know, it's kind of uncomfortable. And I'm like, yo, if this women's empowerment and you want to empower women, you should be like, yo, this is how much money I make, and I want to encourage you guys to maximize and make as much money as you can. And we need to have these comfortable conversations, because that's kind of counteractive. You can't be like, this is empowerment, and then be like, I don't want to talk about this. And this is kind of like something that, you got to go out. We need to be talking about how much money you make. 100 grand a month. Damn. How do I make 100 grand?
Right.
How much money you make? 25,000. Damn, I only make 5. What that? Like, how do I do that? Like, that's the type of stuff you need to be around. Yep. You know what I'm saying?
Exactly.
Those are the conversations you want to have. So I got 2 people that want to tap into the call. So I will connect you with them specifically. Since there's only a few people on here right now, a couple people jumped off early. So I'm gonna connect you with them personally on Instagram, and then you can follow with them and have those consultations.
You said there's 2 people on here right now?
There's 2 people left, yeah.
Okay, 2 people left. All right. So the people that are on here right now, can you tell me their names?
We got Joey and we got Mark.
Joey and Mark, are you sure? Because I'm seeing like Ty and Ari.
Well, Ty just jumped on right now, and I can't tell if Ari's still on.
Okay, all right. Because I'm seeing the comments pop up. I'm saying this.
Joey, Mark, Ty, and Ari.
Okay, all right. So we got Joey, Mark, and Ty and Ari. All right. So I'm going to give, because I said I was like, stay on here to the end. I'm gonna do a big giveaway. I'm gonna give away two things, right? So because we always doing 2s. I'm gonna give away a free consultation for y'all that know me. I charge $3,000 an hour, so I'll give you a free consultation for one of the people, and then if you are already a PMSM member, you get the free consultation. I'll put it like that. You get a free consultation if you're a PMSM member. If you're not a PMSM member, you'll get a free month in the PMSM group. 1 free month in the PMSM group. So I don't know if we can figure out how we can do that. If we're going to do the wheel or whatever, but I need 2 names.
So why don't we do this, man? If you're up for it, and I know Mike got to bounce in a second. Why don't you just do the group call?
Do the group
call. Yeah.
After this,
everybody wins.
After this, so yeah. What? Do a whole hour with everybody?
I mean, listen, a group call with the information going around will hit more than 2 one-on-one calls.
God damn. All right. So this is what I'm gonna do. All right, I'm gonna type my number. I'm gonna type my business line in here. All right, and we'll do a motherfucking group.
It's the holidays, bro. What's up?
What that mean? I'm not Santa Claus, but we all talk Money Tuesdays.
Let's talk Money Tuesdays. I'm saying if you got 5 or 6 people on the group call, it's gonna be better for them and also better for the PMS group.
All right. I'm gonna put it in here.
You know what I'm saying? And then what we're gonna do is I'm gonna send Mike those connects on DM, and then Mike can follow up with them, and then we can set it up. So, Mike,
Awesome.
I want to thank you, man. I know you got to jump, so I appreciate you very much. Thanks for dropping. Thanks for stopping by. We're definitely going to talk about this more, so I definitely want to bring you back at some point so we can kind of go a little bit deeper if we can, or just maybe we'll bring on some maybe next time you could bring on some actual numbers, like they can see what an illustration looks like, so they can get an idea of what a $200 or $300 a month investment would yield them in 10 years, or and I think that would be extremely helpful.
Yeah, I'd love to break that down for them.
And do you have access to that visualization template that you can send? Because a couple people were asking for it, so I can send it off to them.
Yeah. I'll text it over to you right now so you can send it directly to them.
Awesome, bro. Awesome.
Cool.
I appreciate you, man.
Yep. All right, guys.
All right, man. Thank you.
All right, talk soon, guys.
All right, Levi.
I put it in the shit. You see it? I texted it.
Nah, hold on. You put it in the chats?
I put it in the chat. It said at 7:15 after it said, thank you, Mike. Then it says, is everybody still in here? Do I need to type it again?
I mean, I can't see it on my end, but I'm pretty sure they can see it.
Can y'all see it? Let me know if y'all can see the shits. Yeah,
well, I'm gonna tell y'all, man, that information was fire. Every time I talk about it, Ari says she can't see it. So why don't you send it to me and then I can drop it in there.
All right. Look, I'm just gonna tell you on here. All right. So take this number down right now. You can write it down. I give you 5 seconds to get a pencil. Or you could just type it up or whatever.
What's the number? I'm gonna text it. I'll put it in.
All right. Business number is 737-895-2666.
Whoa.
Depending on, huh?
You change that number. You got too many.
So depending on how many people are on here, what do you got? 4 people on here right now? 5? All right, 5. So we can't do a FaceTime no more. But we can either go Instagram Live or we can go on Clubhouse. Last time, I was like, no. Huh?
You want to do Zoom?
Zoom? I mean, we could do Zoom too. We could
do Clubhouse. I mean, if you do Clubhouse, we can let more people in. We could do. Zoom too. You can, if you have Zoom, you can save the info and then resend it later, or just have it for asset.
I'm not interested in saving no info. Y'all need to save the info. If I'm giving that shit to you, like within the shits, take it down. All right. So we can do Zoom, we can do Clubhouse, or we could do Instagram Live. Y'all pick which one, and then we can do it like that.
Or you want IG Live?
Yeah,
I mean, it's not up to me. So,
or not IG Live, the IG call, because the IG call you could do 6 people. You could do 5. You could do 1, 2, 3. Yeah, it's 6 people total within there. So we could do all 6 of us in there on the IG call, or we could do a Zoom and have all of us on there for an hour, or we can do the Clubhouse and do it like that. It's totally up to y'all. Zoom, Clubhouse, or IG Live. Yeah, so Ari says Zoom. What does everybody else say? Whether it's about investments, whether it's about your business, whether it's about your relationships, your life, whatever it is,
we got
hop on there. I'm gonna give y'all the shits. The majority of y'all know how serious my gems are, and y'all know that I always come with the great shit. So make sure that you have a notebook and a pen or pencil and a highlighter, and we're gonna go through it, and we're really gonna like pound the pavement, because of course, as you guys grow, I'm growing. I'm always talking to different people. I'm always soaking in different gems. So I'm always going to have something new to add to your life to make sure that you're good. So if we're going to do it like that, then we're just going to do a full group consultation. I'm going to make sure I have everybody's questions answered fully. We're going to fuck it up. I'm going to make sure that you guys come into 2022, even though I don't believe in the whole New Year shit. I'm gonna make sure you guys come to 22 swinging in this motherfucker. All right, we not doing jabs. We fucking doing hooks, uppercuts, haymakers. All right, over the hand shit. We're making sure that y'all punching in hard. Everybody says Zoom for the most part.
Yeah. So right? So how's this working? Are you gonna say the date and time now, or you want them to text into that number and then you're gonna let them know on that number? How you doing?
Yeah. So everybody text me on that number. Text TMT. Text TMT to that business number, 737-895-2666. All right, you text TMT to that number, and I'm going to send you the Instagram link, the Zoom link, and the time. We're going to do this shit tomorrow. At this time.
So what, 5 o'clock or 4 o'clock?
4 o'clock PMS. 4 o'clock PST, 6 o'clock CST, and 7 o'clock EST. All right. So the same time we did the Talk Money Tuesday is the same time we're gonna hop on here and I'm gonna give y'all these motherfucking gems. So 4 o'clock PST, 6 o'clock CST, 7 o'clock EST. We're gonna go on Zoom. So text TMT to 737-895-2666. All right. And from there, I'm going to send you guys the link probably either tonight or tomorrow morning. And on Zoom, I'm going to give it to y'all. I'm going to give y'all that motherfucking work. So have questions, whether in regard to your businesses, whether it's regards to your life, your relationships, whatever it is. You know what I'm saying? You got your boyfriend, y'all having trouble. I deal with that shit. I've done so many relationship consultations. It's ridiculous. I've done so many life consultations. It's ridiculous. I've definitely done hella business consultations. It's ridiculous. And of course, thanks to the PMSM group for the last year, I've been killing it on the investment consultations. So y'all want this shit? I see the text messages coming in. All right. I see y'all texting the shits. So we in there like swimwear. I can't wait to pour into all y'all and give y'all all of me. You know what I'm saying? All of me. And we gonna work out with the shits.
So since it's basically a group Zoom, I'm gonna open it up to a couple more people.
No. We not opening up to know if motherfuckers ain't tapping into the Talk Money Tuesdays, then they don't get the shits.
But what about more people into the PMSN group?
Huh? We not talking about the PMSM group. I got love for my PMSM members, but this Talk Money Tuesdays, and I put this motherfucking live on Facebook, Instagram, LinkedIn, everything. So the motherfuckers I was on here earlier, and I typed in the beginning, and I said stay until the end. Stay to the end. That ain't my fault.
But I already texted out to 120 people.
Well, you better fucking untext it. You better untext that shit because we only giving it to the motherfuckers that's on here today, right now. I said stay to the end. These are the people that's on the end. These are the people that get it. Maybe in the future, motherfuckers will wait to the end and listen. But that's not our fault. That's not our fault. We blessing the people that's on the shits. These are the people that's fucking with us, the people that's on here right now.
So look, I want to first of all, Mike left early. Well, he didn't leave early, but we're definitely on a little longer tonight. But I want to thank Mike for coming on. Dropped a lot of gems, life-changing gems, and there's a couple of people that won the consultation. But if you are interested in that type of information, if you have my Instagram, which I'll put it here, hopefully you guys are, just DM me, and then we can set up a situation because I need everyone to have access to this information, and so they can decide if it's right for you and your family right now, in the future, or whatever. You need to know the information. Secondly, I want to thank Levi for holding it down. You know what I'm saying? Doing what he does, providing a lot of value and some bonuses tonight. Like the man said, like he said, he gets paid a minimum $3K for an hour. So you're gonna get blessed with not only $3K worth of value, intrinsic value, but you're gonna be blessed with a lot more than that once he drops those gems on the Zoom. So I want to thank him for that. And another thing I would say is I haven't been doing one-on-one coaching for almost a year. You know what I'm saying? However, if you're watching this right now, tomorrow, so you guys are hearing early, tomorrow I am announcing to my email list, my text message list, and on social that I am personally going to coach.
Can we keep jumping back in the ring?
4 people, one-on-one for 30 days. If you're already in my programs, you're going to get blessed with the value anyway. So you don't even have to worry about it. But if there's anyone on here that's looking for business coaching, that wants to make more money monthly, that want to be in a better position with their business, again, hit me on a DM. I got a crazy offer only for 4 people. So tap in. Let me know if you're interested in that, and then I'll give you the information on that.
Tomorrow.
Ty, you already gonna get the value because you already tapped in. But anybody else, definitely shoot me on a DM. We'll go from there. And I want to thank you all for tapping the Talk Money Tuesday. It's been 7 weeks, which is crazy. Next Tuesday is next Tuesday is the last Tuesday for us in the year, right?
Last motherfucking Tuesday.
Let me see. Let me look at this.
I'm pretty sure.
Yeah, next week is the 28th. It's the last Tuesday.
Jeez.
8 weeks in a row. And then we're back again on the 4th, which is going to be the first Tuesday, which is going to be our 9th week, which is wild.
No, now we just getting started. Shit about to get hot.
We just getting started, yo. So I appreciate y'all for tapping in, and we'll see y'all next week. Levi, any parting words?
Like I said in the beginning of this podcast, if you are somebody that needs to get their credit repaired, make sure that you tap in with one of our sponsors, Paper Loaf. Paper Loaf is definitely the best credit repair company out. You're in the 500s, you're in the 600s, even if you're in the 400s, they can get you all the way up to where you need to be. They can get rid of things that you didn't even know that they can get rid of. And once you're up to where you need to be up to, when you're in the 700s, they can help you get those Amex cards. They can teach you how to move with your credit. They can teach you how to purchase things and invest with your credit. They can do all those things within Paper Loaf. So make sure that you follow the IG Paper, PAPER.LOAF, Paper.Loaf. And of course, our other sponsor.
One more before you jump into the paperloaf.com is the website. And I think the Instagram, let me double check, but I think the Instagram has some hashtags in it. So let me just double check right now for y'all.
While he's double checking, let me tell you about that second sponsor, baby. PMSM Group, the Money Streams team. Damn near everybody in this motherfucker is a part of the Money Streams team. If you have not yet started to diversify your asset portfolio, you are wrong. If you have not began with your asset portfolio, you are wrong. Okay, hold on. _PAPERLOAF _ That is his IG name. I apologize, Denroy, my guy. I thought it was Paper.Loaf this entire time. Forgive me.
Paperloaf.com, though, for the website.
Paperloaf.com for the website, for sure. But yeah, Denroy is an amazing man. He's a genius. Tap in with him. But PMSM Group, look, investing is key to building wealth. Having a business does not start generational wealth. That is just a substitute for a 9-to-5. Understand that. Creating a business, owning a business, making money from a business is not a creation of generational wealth. That's not how McDonald's, Walmart, and any of Amazon, that's not how they built generational wealth, is by having a business. It's what they did with the money that they made from that business. It's about making your money, the money that you work hard for, make money for you. And how you do that is you invest. And how you find out those investments is by joining the PMSM Group. So make sure you follow pmsm.group. Make sure you tap into www.moneystreamsgroup.com and get your membership. Understand that anything that's worth making money costs a little bit of money. But commas take commitment. All right? So understand that. Tap in, get plugged in, because we got everything. You got real estate, stock market, all that good stuff, cryptocurrency, bonds, and all that good stuff. We got everything. We got a little bit of everything, and we always adding more. And of course, we got a section for the Talk Money Tuesday. So if you've missed any of the episodes and you're not already following, because you need to like, share, follow, and subscribe to Brendan Boyd's YouTube channel, and make sure that you're tapping into the Talk Money Tuesdays podcast. If you missed any of those, we have a link. We have a whole section for Talk Money Tuesday podcast in the PMSM Group.
All right, guys. I appreciate everyone for sticking on, because this was a long one today. If you need this information, we're going right to YouTube. You can play it back and get everything you need. like you said, Levi, you drop that number. If you're on this call, you're eligible for that Zoom tomorrow. And if you want more information on my one-on-one situation, definitely send me a DM tonight because it's only going to be available until Friday, which is insane. But yeah, that's all I got, man. I appreciate everyone. Thank you to our sponsors. We'll see y'all next week. And